The world is being told everything is fine. Markets are up. Governments keep spending. Central banks keep printing. But underneath all of it, there is a number so big, so uncomfortable, that most people are never meant to understand it. $318 trillion. This is the real scale of America's debt exposure. And recently, one quiet move by China forced the world to look at it differently. Not with missiles, not with sanctions, but with a digital currency. This is the $318 trillion truth. Most people think America's debt is just the national debt. They hear numbers like $30 or $35 trillion and assume that's the full story. It is not. That number ignores corporate leveraged household debt, financial derivatives, and funded government obligations, dollar-based contracts across the global system. When that is added together, the exposure tied to the US dollar system reaches hundreds of trillions. This entire structure depends on one assumption. The world will always need dollars. As long as that assumption holds, the system survives. If it weakens, everything changes. For decades, the US dollar has been more than a currency. It has been the world's reserve, the main trade settlement unit, a backbone of global finance. Oil is priced in dollars. Trade is cleared in dollars. Debt is issued in dollars. This gave America a unique advantage. It could borrow endlessly because the world demanded its currency. But every system has a pressure point, and China has been studying that pressure point for years. China understood something very early. You cannot challenge the dollar with words. You cannot challenge it with protests, and you cannot challenge it with war. You challenge it by offering a working alternative. That's why China didn't rush. They built quietly. Payment rails, trade agreements, currency swaps. And finally, the digital yuan. The digital yuan is often misunderstood. It is not crypto. It is not decentralized. It is not speculative. It is a state-controlled digital currency designed for settlement efficiency. And that's the key word. Settlement. The dollar system is slow, expensive, and dependent on US-controlled infrastructure. The digital yuan offers instant settlement, no SWIFT, dependency, lower transaction costs, direct central bank control for countries tired of dollar dominance. That matters. Here's the uncomfortable truth. The digital yuan does not need to replace the dollar. It only needs to exist. Because the moment an alternative settlement system becomes credible, the dollar loses its monopoly power. Even if to 5% of global trade shifts, say, few major energy deals bypass USD regional blocks settle in digital yuan, the impact on dollar demand is massive, and that's where the debt problem shows up. America's debt system relies on continuous refinancing. Old debt is paid with new debt. Interest is rolled forward. Confidence fills the gaps. But if global demand for US bonds weakens, interest rates rise, servicing costs explode, budget pressure intensifies, this is not collapse. It's stress. And stress exposes weak points. Now let's be clear. This is not an anti-America story. The US remains militarily dominant, financially innovative, capital magnet in times of crises. Money still flows into US assets, but dominance is no longer unquestioned. And that's new. China's digital yuan forced a conversation no one wanted to have. What happens if the dollar is still strong, but not alone? Trade becomes multi-currency, financial power fragments in that world. Debt becomes harder to manage. Not impossible, but more expensive. This is where fear narratives start. People hear $318 trillion debt crisis and imagine instant collapse. That's not how systems fail. They fail slowly. They adjust, they inflate, they restructure value, and those who panic usually lose. That's why this is not a sell everything moment. It's a rethink everything moment. Because during monetary transitions, real assets gain relevance, scarcity matters, liquidity shifts. Direction history shows this pattern again and again. Roman currency debasement, British pound decline, Bretton Woods collapse. No explosions, just transitions. China's digital yuan represents one of those transition signals. Not the only one, but a very important one. It tells us the future will not be one currency, one system, own controller. It will be fragmented, and fragmentation changes how debt behaves. So what does smart money do? It doesn't panic. It doesn't chase headlines. It positions early. Diversification. Awareness. Patience. Because when systems rebalance, value doesn't disappear, it moves. The $318 trillion truth is not about doom. It's about exposure. It's about understanding how much of the global system depends on confidence. And confidence is no longer automatic. China didn't declare war on the dollar. It simply built an alternative, and alternatives change everything. If you understand this shift, you're already ahead. Because the biggest financial mistakes are made by people who react late. If you want more breakdowns like this, no hype, no fear, just real financial reality explained clearly, subscribe. The next decade will not reward blind optimism. It will reward understanding. End.